Welcome everybody to the Q2 report of Echo Investment. We are now going to go through Echo Investment. We're starting with the key facts of the company, then we're going into Q2 highlights. We go into creating destinations, which is one of the main topics of Echo and which is also a differentiator from many other companies on the market. Then we go into our market, our project updates, follow up with financials, and the appendix at the end of this presentation is showing all our projects in much more details, what has happened in the last quarter. Echo Investment, we are now around 1.5 million square meters that has already been finished. We have 1.1 million square meters under development, and we have 149 projects being completed. Project number 150, that will be an important milestone in our history of Echo Investment, will be Galerii Libero in Katowice. That will be really a flagship development of 45,000 square meters of retail, entertainment, and space just to hang out and have a great time. This center will open up now in this October. The management board of Echo Investment SA is me, Niklas Lindberg, CEO, and with me today I have Maciej Drozd, our CFO, and Valdemar Ulbrich, our board member responsible for residential development. And the three of us will guide you through the Q2 figures of Echo Investment today. What we go through here is the pillars of Echo Investment. We focus on Poland. Poland is the core business of Echo Investment, and as we're standing here today, we have divested the last investment we had outside of Poland, which was a land plot in Hungary. So now we are fully focused only on Poland. We are not doing anything outside of Poland, and this is where we're going to continue growing our business. In all the different segments of the market where we're being present, which is residential for sale, residential for rent, it's offices and it's retail. We target to be number 1, 2, or 3 on that market. Because when we have that leadership position, it's when we can change the fundamentals of that market. On top of that, we are going back to have the third pillar, achieving balance and risk and return. This is something that we're going to come back to later on during today's presentation and mainly focus on that in the residential part of our business. How we slightly have modified our strategy in residential that will secure that we can continue developing the great margins we're having of today. In the bigger project we're doing, we're going to continue focus on partnerships. That is like I described in the earlier presentations, it's about how much equity we inject in any individual project. We want to spread the risks among the projects, but also among the different business streams we have within Echo Investment. And then the destination projects. This is a unique thing about Echo. And that is projects like Towarowa 22, Warsaw Brewery, a project we're doing now in Woods, project we're doing in Krakow, and project we're going to do around all the regional cities. That kind of mixed-use project, we really believe is the future of what we're doing. And it's also about a lot of future for the cities that we continue to develop project in. On the right side of this presentation, you see the shareholder structure of Echo. This is just to give you a glimpse of what has happened and how it looks today as a moment of today. Our business model is the same business model we have described through all the different stages of the presentation before. We start by acquiring land. We go into design and permitting. A lot of these things we do in-house. We take it into the construction management that I'm going to describe more in detail during this presentation, how we have worked on a market with increasing construction costs and how we've been able to manage that and still keeping the returns that the shareholders are expecting from us. Then we go into leasing, and after the leasing, it depends what part of the market we're being in at the given time. Maybe in some parts we will hold the building for some time, or we will divest it upon completion. That's a lot by case in the individual projects we're doing. After the sale, we will get new cash into the business, and as we have communicated, up to 70% of the net profit in any individual year, we will distribute up to dividend. The rest of the money we will recycle into the business. Because the core function of this, we want to make sure that we give a sustainable dividend to our shareholders, but we want to continue growing our business. If you look into the Q2 highlights, what have we done? We have sold Westlink in Wrocław for 36 million euros to Globalworth. We have started construction of Face-to-Face in Katowice, and we started with the next building on the Warsaw Brewery. After we closed the Q2 books, we have sold two major investments. We have sold Symmetris 2 in Woods, and we have also sold Sagittarius in Wrocław. So this is two very important activities that we've done that continue generating cash into the business, but also are in line with our strategy. In the residential, we have sold 588 apartments. We handed over 174 apartments, but crucial in this one, we started up the Resi4Rent business, which is a big part of the future growth of Echo. This is outside of our Resi4Sale business, but will be a great complement. We see a huge potential to continue growing this business, which is a much more of a long-term business. Financing, we have got approved for 400 million of bonds. We have issued 190 million bonds, which is a strength in the market position where we are today to be able to issue bonds and which kind of successful pace that we're doing in Echo. And we have sold 35 million of shares in EPP. We still hold 50 million shares in EPP. We still stick to the strategy. This is not something we're going to keep long term. This is something that we're going to continue divesting as we go along.
My name is Maciej Drozd. I'm CFO of Echo, and I have a pleasure today to share with you the great results that we have achieved in Q2 and in the entire first half of this year. So our net income was 76 million Polish zlotys, and it is almost 50% higher than the consensus. We are very happy with that result, and especially as we would like to highlight how it compares to previous year. Previous year presented in a way that we exclude results that we have achieved on the revaluation and disposal of EPP shares. One step back, in last year, in Q2, we have both changed the accounting rules and disposed of EPP shares. And the effect of that was that we have recorded around 100 million zlotys gain on this stake of shares. So if we make this correction of last year and we compare income coming purely from our development activity, we can clearly see that we did improve over 30% in first half of this year, or almost 90% in terms of increase of net income figure compared to Q2 last year, which is a great result. All of that has been achieved in a very strong market environment. Obviously, Polish economy performs very well in terms of GDP growth, in terms of declining unemployment, in terms of purchasing power, which is very important for our retail projects. So we are very excited and we look forward to the rest of this year and to the future.
So coming back to what I talked from the beginning, building destinations. One of our flagship developments you see here on the screen is Warsaw Brewery. You see in front of you all the residential buildings on your right side, Warsaw Brewery A, B, and C, are started and being fully sold. You see the gatehouse offices called Brewery A being 94% leased and in advanced negotiations with a future buyer of this one. The Resi4Rent building is already now structured and to be able to transfer to the Resi4Rent platform. Brewery Villa offices K have building permit and construction is ongoing. Brewery J and H will be started in the coming month, and the same as the Brewery A residential. This whole area will be ready 2020. We will deliver to the market a 4.6 hectares development consisting of more than 106,000 square meters of mixed use. 3 squares that we hand over to the city center Warsaw, that is really making sure that this part of Wola will be a meeting point where you will really go to just, otherwise you go into the cellars, to do the eating, or you will go there just to gathering around in many of the green areas that we are creating. In the Warsaw Brewery, we have signed up with companies like WeWork, we have signed up with EPAM, we have signed up with L'Oreal, and we are now starting up the coming phases of the building as well, where we see a huge interest from tenants. They really believe to get into these areas that are the mixed use. And this is something that we're really going to continue growing our business based on. We want to be the company that creates destinations, but we're really pushing the cities and the boundaries forward to make sure that we create this kind of meeting points in the city centers, both in Warsaw, but also in all the regional cities across Poland. Here is what you see in front of you now. On top, you see the underground cellars. And if you walk out in our product today, you will see they're already being uncovered. This is really going to be a fantastic place to meet and to socialize. This will be a little bit similar to Halakoshiki, but in a much smaller scale. This is really where I think will be the meeting point of Wola, where people will go just to hang around and socialize. You will see the brick building that says Warszelna now. That's going to be a brewery. We're going to do a microbrewery on this site that's going to produce beers that will only be sold at the Warsaw Brewery. We are now in advanced negotiation to get that whole building to be a brewery and a restaurant complex just built around beer and food. We really believe that you build places today that has to be so much more than just an office or a residential complex. There has to be the whole thing gathered together, and also that we bring together the history with the new. This is really something we believe a lot in Echo and how we can continue doing that. We will do many other projects like this around Poland. And what we will do now is we're going to show you another complex similar to this that we're going to build outside of Warsaw.
Hello, my name is Waldek Olbryk, and let me just take you to Łódź now. This is another project we are mentioning for some time. In August, we received the master plan agreement from the City Council and the Voivod. And this is another project called Destination. Destination because this is not only about those who will buy the apartments, those who will lease the offices, retail, but also for those who will come and, which is extremely important, they will want to come back. And our intention of creating the destination places is just to make those places like a vibe, like a place to meet, like a place not only for those who are the owners or the tenants, but those who are the citizens of the city and beyond. So we plan to start the construction next year, and what we are working on that project is quite similar to other destination projects that we are having in a pipeline, that we want to create a great experience for everybody who will just be there and spend time with friends, with family, with colleagues from the work. And having now the opportunity of being in front of you, what I really want to share today with you is a status of resi market. We see the market like a very good one. We see the market like a market which shows absolute demand for the new apartments. Everybody is talking, everybody needs of the need of the new apartments, and we are the part of that market. Even though we saw the increase of the construction cost, we saw at the same time the increase of the prices that need to be adapted to leverage that situation. But we see the great interest of the buyers. And to reply to that, to keep something which is extremely important for the business, we continue to deliver new projects to the market. But we made a small change that I will talk to you a little bit later. As it was said, by the end of half two, we delivered to our customers, we handed over 174 apartments. What is extremely important, we improved on margins. We improved on the financial results, even compared to the previous year. And it's also for us the sign about the proper strategy that we have taken. So far, having seen the results of the market and also need of reconsideration of the strategy, we decided to continue with a little bit slightly corrected sales plan. And already today, we are at the level of 60% of the sales plan compared to the 1,100 that is foreseen for 2018. And if you see that slide, that's a little bit the explanation what we believe it should happen. Understanding our clients, that they believe much better in the product when they see the product, when they understand the, I would call it the beauty of the location, the beauty of the concept, because many of those locations, they are also using a lot of ideas from destination places. I will talk about one in a second. We believe that giving something more to customers is justified by the reconsideration of the sales strategy. And we decided to go from full speed sale to a little bit more balanced strategy for the sale, which is 80% by the end of the construction, and we give ourselves the 6 months to complete the sales process for every project. Currently, we are doing more than 3,000 residential units, both in the resi for rent, resi for sale. But also, what is extremely important, we plan to launch the new project on the market. This 2,000, which is targeted for 2020, we see as a very ambitious but feasible target to be done. So by the end of the year, we start another 750 apartments with the projects to come. And as I said, we target to hand over around 1,000 apartments to our customers.
So if you move back to this slide, we went back to saying from what we said from the beginning, we're going to hand over 2,000 apartments. That is our strategy for short-term vision. By 2020, we're going to sell 2,000 apartments. So what has happened now, from the last time you saw here, that was 1,300 apartments sold in Q2 for the whole year of 2018. That's now moved down to 1,100. The 200 has been moved down 1 quarter to next year. You see the target for next year is 1,500. Then for 2020, we'll do 2,000. All this we've done to defend the margin of 30% plus. We have seen that it takes more time to increase the sales prices than it took time to increase the construction cost. And here we have seen a 5 to 6% increase on sale prices, but a 15 to 20% increase on construction prices. So we have worked on both of them. And also we see when people come into the apartment, they can touch and feel. You're willing to pay more. Because both of all, you can see what you're getting, but also at the same time, you have a shorter time from you take a decision until you can move into your apartment. This is fully in line with our strategy. We want to deliver stable return to our shareholders, and we want to make sure that we optimize the experience of our clients. Then we have a separate platform that is now fully up and running. We have 1,300 apartments ongoing in resi for rent. In the coming year, we're going to start another 1,700 apartments. In the coming 5 years, by the end of 2023, we are going to go up to a minimum of 5,000 apartments. And that is something that we already today have visualized in front of us. We have more than 3,000 apartments already secured in our pipeline, and we're going to continue growing that business. We think that business is extremely interesting. It's a long-term business. Echo gets a fee for being the construction manager of this, and also we get 30% share in the final JV product. This is something that we can do, which is much more long-term than the rest of our business, and will create a fantastic balance within the company of Echo. We are also one of the few that grows up to this scale. Many questions we're getting is, why don't you sell the apartment instead and get the 30% margin today? We believe that we will get the same margin or better having this long-term vision. We really see that this is a business that will grow, and we've seen it in more mature market in Western Europe, that this is really a success factor for the companies, and they will also show a very substantial yield compression like this. So we really believe in this, and we think this is the biggest part where we're going to continue growing our company. We have also launched another destination project on Betervena Street in Warsaw. We did a project consisting of 2 office buildings and 1 residential building. In the office building, the first office building will be by year-end leased up to 60%. We see a great interest in the residential building that we just launched the sale of. But we launched that with the same strategy as we had before, 80-20. This is the project that we want to continue doing more of. And we're doing more of these projects around Warsaw, and we really see this is really what we want to develop and what the end consumer wants to buy. If you look at Warsaw from the office market, we see there is a lot of new companies moving in here. We see vacancy going down. We see rental growth in the market. And we see also that they're looking for the attractive locations. What you also have seen, we've seen historical low yield levels. And what we see on the Warsaw Brewery, and both on that and Bettervena, we see huge interest both from tenants and also for investors in the ready projects. So that is why we are so positive of starting more projects in Warsaw, because already today we see interest from both tenants and investors. In the regional cities, there's much more of a BPO sector, but we see constantly growing on that market. We see also the demand is strong. We see the cities are growing, and also we showed you just in the first slide, we sold buildings in Wrocław, we sold buildings in Łódź, and we sold buildings in many other cities around Poland. So we really see that the rental is happening in the regional cities, but also the sales pace is very good for Echo. We sold Westlink to Globalworth. Upon completion, a building that is fully leased to Nokia is sold directly the day we open up the center. Here you see the coming 4 buildings that we're going to sell this year. The 2 buildings marked we sold is because they are being divested after the completion of the Q2 results. The rest one you see, Warsaw Brewery, we will now in Q3 sign the preliminary agreement to sell that building, and in Q4 we're going to divest a Polska Phase 3 to EPP that we have a signed pre-agreement with. So this is really the 4 buildings that will be divested during this year. We have them fully leased almost, except for Polska that we're leasing up now, and there is already a buyer designated for this project. Retail, it's an interesting market that has changed dramatically over the last years. The 2 new retail locations we're doing, it will go from the food and beverage and entertainment, historically at the level of 5% of the center. In our new centers, it's moved up to 15 to 20%. We see that we are doing it in Katowice and we're doing it in Warsaw. The vacancy rates are going down. We will see in our project, what we will show you is the NOI has been growing in both our projects. We also see yields, the same as the office, going down to historically low levels. There are 500,000 square meters under development, out of which we have 130,000 square meters ongoing in new developments. The most others are other extensions of existing centers or refurbishing of existing centers. Libero, a beautiful center in Katowice that will open up next month. It is 45,000 square meters. It's fully leased. We have a beautiful square outside that we're going to really show. It's going to be so much more than just a shopping center. It's going to be a destination point where people will meet. We will see here that NOI has growing from 9 million in NOI to 9.5 million in NOI. So you see 500,000 in NOI growth. And we always see here as well, we see that also yield compression happening on these markets. The next one is Galerii Młociny. 6 months prior to opening up, we're 87% leased. We have seen NOI growth on this center, but also most important with this center, we're going to welcome a lot of new tenants to this market that has been really not existing before, and we're going to have an extremely attractive tenant mix. You see here in the slide the mix of different tenants, and on top of that, we're going to have a 6,000 square meter food and entertainment area. So we are investing a lot more in this center than initially planned, but we are creating it a much, much, much more attractive center. And all the things that we are additionally investing in the center is shown also in the NOI growth. So we believe really that both in that we will benefit from the NOI growth, but also we will benefit from a decreased yield on this building, because it really shows the attractiveness of the center. So coming back to construction, we have had a dramatic increase in construction prices all over Poland during the last 1 or 2 years. As Echo, we have worked with construction management. We have a lot of people in-house, we have architects in-house, we standardize our products, and also now in residential, we both changed the strategy, but also we went from general contracting to construction management. So we're really working now with optimizing the product, making sure that we are in line or below the market to continue to develop very, very attractive product. But Echo also stands for quality. So we're not going to compromise on the quality. We're going to continue developing attractive products for the markets. But going forward, we are looking a lot more into packaging. We're looking a lot more into standardization to continue growing our business. And that's why you see now that we are now pushing to start a lot of new projects based on that we have standardized and we got the construction costs under much more control than historically, where the prices was increasing dramatically from one quarter to another. We've seen them slowly flattening out now, which we think is a good sign, and we are ready to start much more projects. The land bank. We have secured 110,000 square meters of land during the first half of the year. We have 180,000 square meters in advanced negotiation to be closed in the coming 6 months. This is really showing that we buy land in the areas that we really believe in. We also buy land at prices that we think are sustainable. If you look at the prices here, we bought land for around 800 zlotys per square meter. So that is a very attractive pricing. This year, we are only buying for residential. That is what we're focusing the growth on this year. So majority of things we have bought now, going forward, will be residential plots. Out of this 180,000 square meters, the majority is residential plot. If you look for 2019, there's going to be a mix between residential and offices that we're buying. And this is all in line with always having a land bank to be able to handle the coming 2 to 3 years, because that is the time it takes to take a land bank through the permitting cycle. You see here on the right side, the plots we have under negotiation, how they are split between the different functions that we are developing. Then we have non-core assets. We've been very clear that everything that is non-core to our business will be divested. We have divested everything outside of Poland that was non-core, and also inside Poland, where we had plots that was not really fitting into the strategy of Echo, should be divested. We have divested this year around 100 million zlotys of non-core assets, but we then has reinvested that money into our business to continue generating new returns and new profits. This is something that we've been very clear with from the first beginning. We want to focus only on Poland. Now we divested the last plot outside of Poland, and we're going to continue focusing on growing our business with core investment in core land. That is the ones we need to grow Echo.
Now I would like to go with you a little bit more detail into our financials. So let's look once again at our results, both actual and adjusted pro forma adjusted results without EPP impact. So as I already mentioned, we have overachieved the consensus by around 50%. And we have also increased our numbers, excluding EPP impact of around 100 million coming from revaluation and disposal of the EPP stake. We have overachieved around 30% over first half of last year. So our actual result for the quarter was 76 million, and for first half of this year, 127. And on this basis, we are comfortable looking at the year-end numbers, and I would like to go now into the details of what were the main drivers of our profit in the first 2 quarters, and also what is left there for the rest of the year. So if we focus on the second quarter, we can see the margin earned on residential apartments, and it's 33 million. And for your convenience, we have shown here projects from which this margin comes. So you can see this is mainly from Kraków projects, which are very beautiful and extremely successful projects that we completed, and we are handing over to our clients. The second important element is revaluation of our commercial projects, and you can see that a very big part comes from projects that are actually sold. So this is a very solid revaluation gain. So it comes from Westlink, which was sold in June. It comes from Sagittarius, that was sold in August. And the last big contributor is Libero Shopping Center that will be opened within next month. So we are very, very close to seeing its full potential and how well it performs. We also received a 12 million dividend from EPP, and I think this is a very important number, 44 million coming from revaluation of our 30% stake in Młociny project. And I think it's very remarkable, and probably that's one of the sources why the market didn't completely, rightly estimate our result, is Młociny. It's extremely successful project. As Niklas mentioned, we are achieving better than originally planned NOI. And also with the tenant mix and with the quality of the project, we are confident that the final yield will be very favorable. So we are going to see the effect of Młociny valuation also in the following quarters up to the final sale. So let's look at the remaining part of the year, so third and fourth quarter. So looking at our target and the fact that we handed over 174 apartments, we still have around 800 apartments to be handed over. And of course, the margin earned will be reflected in the second half of the year. Similarly, if we look at the projects that are going to be revalued, we have a whole list here for you, and these are the projects that we started or will start soon. And as our rule for the first valuation is that we fair value project initially when we have building permit, when we contracted 30% of the costs and achieved at least 20% leasing threshold, then we can expect reasonably revaluation of the project that are listed here. So not only brewery buildings that we start, not only building K, but also next building, but also projects in Katowice and of course Moje Miejsce in Warsaw that was described by Niklas. And clearly, again, by the end of the year, we expect a valuation of our stake in Młociny project. Just to remind you where we are with the divestment of EPP shares, we owned at the beginning of this year around 50 million of EPP shares. We have sold around 35 in June, so 15 remains on our balance sheet as financial asset for sale. And the value of this stake at the end of June was 71 million zlotys. Let's look at the balance sheet at the end of second quarter and how it compares to what we have seen a year ago. You can see a sort of modest growth of balance sheet, but I think the changes within the structure are important, and I think these are changes in the right direction. So we have more cash than a year ago. Our value of our projects under construction, so investment projects under construction, this is where we make money, also is higher than a year ago. But probably the largest change is in the structure of our liabilities. You can see that compared to a year ago, we have much more long-term liabilities, and I will show you later on the maturity, and you will see that indeed we moved to longer maturities of our debt. Also, our equity is higher than a year ago, despite of the fact that we paid 200 million dividend in Q2 this year. So just to do a quick math, this 343 million of cash that we have on the balance sheet is after paying 200 million dividend and after paying 400 million of bonds that matured in first half of this year. If we look a little bit more in detail at our assets, and this is what we do regularly from the liquidity perspective, we will see that, of course, we have 340 million of cash, which is by definition the most liquid asset, but we also have trade receivables and restricted cash, and restricted cash comes from this is money that was put on the on the bank account by people who buy apartments from us. So this is being released proportionally to the progress of apartment construction. So this is being released to us. Then we have EPP shares, which are also for sale. Then we have residential inventory, meaning apartments that we also continue to sell, and this way we generate steady cash flow to the company. Then we have completed office buildings, and just in this second quarter, this consists of projects that were converted into cash almost immediately, because Sagittarius and Symmetris were already sold, and Opolska is a third building in this group, and it's also for sale shortly. We have plots for sale, and as Niklas explained before, we generated from this category 100 million PLN this year, almost 100 million, and we still have around 50 to do also. Then we have a part of our balance sheet which is less liquid, but this is exactly where we make most of our money. So these are commercial properties under construction and retail JVs, and clearly the exit date is a few years from now, usually, but here is where we make our profit. So we are very comfortable with this structure, which has a very good mix of liquid assets, or close to liquid, and the assets on which we make our profits. As I already mentioned, our maturities of debt moved to long. So if you look at our bond maturities at the end of second quarter, you can see that we have little maturing in 2019 and 20. That's, of course, after we repaid 400 million in first half of this year. We also issued 190 million of bonds already this year, and the structure was 140 to institutional investors and 50 million to retail investors, and 50 million was done within a prospectus for 400 million, which we, of course, have, and we intend to go back to the market for bonds, both to retail and institutional investors. Our dividend policy is the last part of this of my speech, and this is just to remind you that our dividend policy stays the same, which is that the management board will recommend distribution of up to 70% of the profit. This policy was in place first this year, so in respect of 2017 profit, we distributed 50 groszy per share, which was around 68% of our previous year profits, and of course this stays unchanged, so we expect to distribute profits in April, May next year. This is a policy in respect of profits earned, so the distinction I want to make is that we also, when we sold EPP shares or assets to EPP in the past, we also distributed additional dividends. And in this case, we are collecting around 60 groszy per share this year out of EPP stake. Of course, the decision on that needs to be taken by the shareholders' assembly, but historically, these funds were at least partially distributed on top, of course, of ordinary profits. So that's all. I would like also to draw your attention to the appendix that we have in our presentation, and this is to improve and increase transparency with each quarter. And we give here the details of all our projects one by one, so you can see the dates of the projects, the budgets, the income part, and starting from this quarter, we also include the revaluation gains on our projects. So you can see what was already recognized, and let me scroll to one of those. For example, here you can see that how much we recognize on each individual project in operation as of end of Q2. And for example, we see here Symmetris and O3 and Sagittarius. So if analysts or investors want to run the math and calculate our profits and check how we perform from quarter to quarter. We are fully transparent and we give you all the details to make a proper evaluation. Thank you very much.
Thank you for the presentation. And now it's a time for questions.
Hi, Alicia Plakton from Reuters News Agency. My question concerns your net profit, because you say that everything goes really good, that the margins are increasing to 33% from 28%, yet the net result was 40% lower this year. Because in your statement and in your presentation, it said that the net result was at 76 million zlotys, yet a year ago it was 27 almost. What happened and why it's lower, although margins are higher?
You compare this, I'm not sure I understand, you compare this to last year, right? To 2017. So let's look once again at the first table in detail. So on page 11 of the presentation, you have a table which gives you results which are without a sale of EPP stake, right? I think that's a very important point because, of course, otherwise, and thank you for this question, otherwise people may think that our performance is not improving year on year. And I want to make it very clear that it is improving. And why is that? So once again, last year we still owned a lot of EPP shares, which we sold partially in June 2017. And this operation, I mean the revaluation of EPP stake and the sale, generated in the first half of last year around 100 million PLN gain. So our result was increased in H1 of 2017 by around 100 million by a one-off event which was caused by the revaluation and disposal of EPP shares. That's why we show this pro forma analysis here without that impact to be able to compare pure development profits. Because what you talk about, the growing margins and similar things, they are development profits. I mean, this is something that we manage from quarter to quarter, and that is our core activity. Of course, a sale of EPP shares was a one-off, right? And because they are sold, they will not be sold again, so this will never happen again. So without that, I mean, if you look at this table, you can see that our results in terms of, of one quarter are better by 88%, and if you look at the entire first half, it's 33%. Of course, if you scroll forward, if you move forward to the results which are not adjusted, right, which are not pro forma, on page 34 of our presentation, you can see actual results and pro forma results, right? And then actual results for last year, for H1 were 180 million, and pro forma without EPP were 87, right? This is this 100 million difference that I mentioned, and this is why if you compare quarter to quarter or half year to half year, we believe you need to take out EPP effect and compare this without that, right? Otherwise, of course, you may have an impression that the business on one hand is improving because the margins are high, etc., but on the other hand, you don't see that in the numbers. Actually, you see that in the numbers, but of course, last year was under the impact of 100 million profit from EPP shares.
Other questions? I know that we have two questions from from those who are watching us online. And the first one is regarding to the destinations project. If the destination is just a marketing idea or it has any impact on financials and business growing?
Destination projects has a huge impact on the whole business model of Echo Investment. It's not only a marketing thing. Here you really see the benefit we're doing it. Just walking around looking at the Warsaw Brewery. Also in some of our projects, we can use the land plots so much more efficiently, having a mix of offices, residential and resi for rent. And by saying that, some of these resi for rent products you can use in areas where I can never do residential for sale. So this is really something we believe strongly for the future. And also going forward, when we get much more advanced in 2020 and 2019, with Warsaw Brewery, we can also show you the isolated profits on this destination project that will really show you that it's highly profitable projects that are quickly from the day we start them until we enter them. So you both get very high returns, but also very quick in and out of these projects with a lot of synergies being built at the same time.
The second question regards to a project on Emilii Plateau 51, if we are involved in this project.
The Emilia project is not owned by Echo, so it's nothing that formal Echo is involved in. The Emilia is one out of many developments that we constantly are evaluating what to do with and looking at forward how to continue to develop. It's a very attractive location in the city center of town. So this is, of course, one of the locations we're analyzing out of many.
In light of the fewer units sales targeted for the sale this year, if the target 2,000 apartments by 2020 is still valid?
We're going to start 2,000 apartments by 2020. The lower sales this year is a strategic decision taken by Echo. We have taken that solely ourselves because we believe defending the margin long term is the most important thing for a business like Echo. Then if we delay it by a quarter or two by selling, it is not that strategic important. As you see in our scale, we're going to do 1,100 sold this year, 1,500 a year after, and after that we're going to go up to 2,000 apartments. This is always what we have communicated in line with our strategy and also in the strategy of the profitable growth. It's always that we need to defend the margin and the profits. And that is something we're always looking at the market where the construction costs are increasing quicker than what we are able to take out of the buyers of the apartments. By saying that, we also see now that cost has stabilized on a level, and we think that it's really a good time now to continue growing that business.
The question on Towarowa, can you give us an update on the status of this project?
Towarowa is a very, very interesting project. There's a misperception about many people that it's only a retail project. This is a destination project. It's going to consist of about so much more than the traditional retail. Retail is going to be a part of what we're doing there, but it's going to be less than 50% of what we're going to do in that area. It's going to be a mixed use. And when I say retail, I mean traditional retail. If you put retail in the bigger portion, of course, it's going to be a bigger part of it because there are going to be cinemas, there's going to be theaters, there's going to be entertainment, there's going to be food trucks, there's going to be huge public squares for the public. So what we have seen of today is the retail part that we've always been communicating stays roughly the same. But on top of that, we're going to do offices, we're going to do residential, we're going to do hotels, we're going to do resi for rent. There's going to be so many functions happening there. And we are now working through the planning permit of this stage and working with a very well-known international architect. So we really believe this is the future of building these areas. We're going to build it in the human scale in the same way as we do with the Warsaw Brewery. We're going to do something that is digestible for the cities and for the inhabitants of Warsaw. We're going to do big public squares that is really beneficiary for all the inhabitants of Warsaw. And so coming back to your question, what we see now, we're going to get much more density out of that area. So it's going to be a bigger project that we have seen before. It's going to be in the human scale like we do in the Warsaw Brewery, but much more of a mixed use that's going to be really a destination for that part of the city. And we think that's really needed with 1 million square meters of offices being developed around. This is really what you need in that part of Wola.
The next question is quite easy on Resi for Rent platform if Echo considers increasing its stake in the project.
What you will happen, Echo has 30% stake in that one. What you will see as we grow the business, Echo will continue investing in that business, but we will keep a level at roughly at 30% now going forward. And that is what we have seen up until we get up to the 5,000 apartments. After that, we have to see how it develops, what is the market seeing on this, and how is that part of the residential market growing in Poland. Because what you should remember, it doesn't exist today. There's nobody who has 1,200 apartments under construction, 1,700 in the pipeline, and says we're going to do 5,000 by 2023. So it really is an extremely interesting project for Echo. And I don't think we get fully the benefit of what we're creating here, because we're really creating a long-term business that has been so highly profitable in many of the neighboring countries around here. And also, we think this is a really interesting angle with all the new generations coming up that don't want to commit so much to owning an apartment, owning a car, but it's more of this sharing community, more that want to lease it and having that flexibility. And we really see that. And every building is built standalone as a community. And this will also complement our resi for sale versus our resi for rent. There will be different products that will complement each other and will not compete against each other.
Question to the 2,000 unit target, if it's going to be sale of apartments or handover?
That's going to be sale of apartments by 2020. And what we see going forward, that of course there will be a lag behind of roughly 12 months until those sold, 12 to 18 months before those become from sold to handed over apartments.
And the last question for now, it's regards to Mieckiego. In Łódź, the question on kind of details when the apartments will be selling in the project.
I think the biggest success of every destination project is just to create this reason to come, which is kind of a concept of the project as a whole. We are now busy with that project also from that perspective, to not to just go for the apartments purely as a separate product in the whole system. And we are trying now to get team with the great experience from Browary, with already experience from Towarowa, to come together based on the agreed master plan with something that will be really special to create the quality of life promise, I would say. So eventually we are planning to start the sales of those apartments next year, and I'm sure you will hear about it. It will be not just a silent project.
Any question from the room? So then once again, Towarowa, when can we approximately expect the completion of the first stage?
Towarowa will not be a first stage. Towarowa will be one stage when we do it all. And we are not giving guidance of any of our projects when they will be completed, and we will stick to that philosophy as well with Towarowa. What we say now is that we're working on a really interesting scheme. And I'm really excited of sharing that scheme with you now going forward in the coming forecast, so you can really see what a beautiful part of Volla that we will create.
So if there is no other questions, we're ready to ask questions after the presentation. So thank you very much for the presentation, for being there.